Imagine this, it's 2022. Powell just decides to hike rates because he cut it like crazy in 2020 post-COVID. Powell decides to hike rates like crazy. Everything gets totally smashed. People lose their jobs, people get their 401ks totally wrecked. Professional traders on Wall Street sitting at Goldman Sachs print money at your expense. Professional traders have already long the VIX and have puts over the broader market, mainly discretionary and tech. Same market, different outcome. You know that there is a repeatable framework which exists out there. Otherwise, like, why do you think pension funds and these huge endowments or these people managing these billion-dollar portfolios can't afford to lose that money? You're not going to choose price action or technical analysis if you're actually managing $1 billion, right? You actually need a repeatable process. You've probably realized that there's actually a process out there, and this retail trading garbage is just total, which is exactly what we're going to break down in this video. Now, as an example, right, we were talking about like Powell hikes rates, right? As a function of that is just CPI, okay? Now, what's going on in the news right now is that we have CPI going up like crazy, okay? Mainly it's because of this oil shock we're just having. So retail traders just react to the CPI number. Professional traders predict the CPI number. They look at these nowcasts, and again, like, it's totally crazy, but like the Atlanta Fed, right? Or like the Cleveland Fed right over here, man, they've already predicted their numbers on their nowcast, okay? And what usually happens is that they actually downplay these nowcasts. Like, these numbers aren't actually this, like, it's actually a lot worse. What happened last month, right? We had CPI come in like 0.9% month over month. This is like what they're projecting right now. Like, the Fed, they're looking at like numbers which are like not as bad. Like, these numbers print a rosy picture. It's actually not that good. Right now, the CPI is actually pretty bad, okay? Professional traders know this, okay? And there are some like leading and lagging indicators to CPI. And I'm gonna tell you guys a secret. It's not what you guys think. CPI numbers is essentially just shelter prices and oil prices. These two factors move CPI the most. This is exactly what I learned after being mentored by professional traders on Wall Street, Anton Creel and Raj Malhotra. These guys, ex-Goldman and ex-Bank of America guys, they monitor oil prices and shelter prices like crazy. That is what professional traders look at in order to like front run what the CPI number is going to be. They don't look at like what consensus is, right? Again, like, consensus is okay, but like what they look at is the whisper number. The whisper number is what buy side desks or hedge funds, the Ray Dalio types, the number which they come up with, right? There's a consensus number which is like what Goldman Sachs and like Bloomberg analysts come up with. That is the consensus number. We have the whisper number which these buy side desks come up with. And usually if the CBI number surprises that whisper number, that's when you have the huge move which happens, okay? Now, let's talk about how do you get edge on a trade, okay? So let's go back to 2022, okay? We're sitting there, you've tracked these leading indicators in 2022, and you know that because Powell cut like crazy in 2020 to inject liquidity in the market, inflation is coming super hot. Sooner or later, we're going to get a rate hike, and the FOMC is coming up, and you want to know how exactly you want to position yourself, right? So what a guy at a buy side desk would probably do is that before the FOMC, he'd buy VIX calls, okay? He'd buy out of the money VIX calls or a VIX call spread, positioning himself in such a way where that, like, if it actually surprises to the upside, he makes a 6-1 or a 10-1 return on that trade. He shorts the 2-year treasury bond, the SHY. If inflation comes in hot and we get rate hikes, fade the initial move. That is what a professional trader would do, construct those using derivatives so that their main book stays hedged out. Now guys, I wanted to imagine yourself in a situation, okay? Imagine you're just sitting on your desk and the CPI number is going to come out. Most people are just like panicking and fretting about like what that number is going to be. People are going crazy on Wall Street bets. People have no idea what the is going on. You're just there sitting totally calm. You know everything that's going to happen, all the scenarios baked out. You've looked at the leading indicators. You know exactly what's going to happen. You've positioned yourself in such a way where that if things do happen according to the way you think, you make a ton of money on that trade because of your out of the money calls going in the money. You have a scenario mapped out where you know exactly what's going to happen. You're not going to be having to rush to the toilet cubicle during your break at work, double checking your brokerage account every 5 minutes to see whether how much money you lost. You're not going to be having to do that. You don't have to tell your wife that the market is just chopping around and you have no idea how the trading is going. Well, that's exactly what we discussed on this channel. How you actually bridge that gap from the macro to the micro. In this channel, we just discussed like how you can execute better and how you can make better decisions than 99% of people out there monitoring the wrong indicators, looking at like Discord or looking at like Wall Street bets for trade ideas, right? If you want to see more content like this, keep watching my videos.